Hi friends, welcome to All About Accounting. Today we are going to continue with the topic Accounting for Partnership Basic Concepts. If you have not watched our previous videos on this topic, please do watch it before you proceed with this one. I am giving the link of the playlist in the card above. If you have not subscribed our channel, please do subscribe and press the bell icon to get instant notifications. Please share this to your friends for whom this may be useful. If you are getting benefited by my videos on this topic, partnership, please let me know through your comments. I have given the link of the PDF which contains the notes displayed in this video in the description box below. Please make use of the same. Today we are going to look into the topic interest on capital. As the name suggests, interest on capital means an interest which is calculated on the capital contributed by the partners. This interest is paid to the partners only when there is a specific agreement between the partners while entering into partnership. In the absence of a specific agreement between the partners, no interest will be allowed on the capital contributed by the partners. Interest on capital is provided usually in two situations. Number 1. When the partners contribute unequal amount of capital but share profits equally. Number 2. Where the capital contribution is same but profit sharing is unequal. To put it simple, interest on capital is provided to match the imparity, that is inequality between the capital contribution and the profit sharing ratio. This interest on capital is calculated by taking into account any addition or withdrawal of capital during the accounting period. There are three scenarios under which interest on capital is calculated. Scenario number 1. When there is no addition or withdrawal of capital during the accounting period. So, whenever there is no addition or withdrawal of capital during the accounting period, the interest is to be calculated for the whole year on the amount outstanding at the beginning of the year. So, let me repeat. The interest is to be calculated for the whole year on the amount outstanding at the beginning of the year. Let us have an illustration to understand the calculation of interest on capital when there is no addition or withdrawal of capital during the accounting period. So illustration number 1. Mohini, Rashmi and Naveen entered into partnership bringing in rupees 3 lakh, rupees 2 lakh and rupees 1 lakh respectively into the business. They decided to share profits and losses equally and agreed that interest on capital will be provided to the partners at 10% per annum. There was no addition or withdrawal of capital by any partner during the year. So we need to calculate interest for the whole year on the amount outstanding at the beginning of the year. Therefore, for Mohini it is 3 lakh rupees into 10%, which is 30,000 rupees. For Rashmi it is 2 lakh into 10%, that is rupees 20,000. For Naveen, 1 lakh into 10%, that is rupees 10,000. So these are the interest on capital for Mohini, Rashmi and Naveen. Therefore, when there is no addition or withdrawal of capital during the accounting period, you need to calculate interest for the whole period on the amount outstanding at the beginning of the year. Now let us look into scenario 2. When there is an addition to capital during the accounting period. If in case there is an addition to the capital by the partner during the accounting period, then interest needs to be computed on that amount for the corresponding period for which it has remained in the business for that accounting period. So let me repeat. The interest needs to be computed on that amount, that is the additional amount for the corresponding period for which it has remained in the business for that accounting period. For example, if a partner brings in rupees 40,000 on 1st October for an accounting period ending 31st March, interest on this 40,000 rupees is to be calculated for 6 months because the capital of rupees 40,000 has remained in the business only for 6 months during the current accounting period. Now let us have an illustration to understand how to calculate interest on capital when there is addition to the capital during the accounting period. Mansoor and Reshma are partners in a firm and their capital accounts showed the balance of rupees 2 lakh and rupees 1 lakh 50,000 respectively on April 1, 2016. Mansoor introduced additional capital of rupees 1 lakh on August 1, 2016 and Reshma brought in further capital of rupees 1 lakh 50,000 on October 1, 2016. Interest is to be allowed at 6% per annum on the capitals. Now let us look into the solution for the same. For Mansoor, on opening capital, that is for rupees 2 lakh, we should calculate 6% interest for the whole year. Therefore, 2 lakh into 6 divided by 100, which is equal to rupees 12,000. For the capital brought in on 1st August 2016, we should calculate interest for 8 months only, because the amount has remained in the business from 1st August 2016 to 31st March 2017, that is for 8 months. Therefore, 1 lakh into 6 divided by 100 into 8 by 12, which is rupees 4,000. Therefore, interest on capital for Mansoor is 12,000 plus 4,000, which amounts to rupees 16,000. In the same way, for Reshma, on opening capital, we need to calculate interest for the whole year, that is 1,50,000 into 6 by 100, which is 9,000 rupees. And for the capital brought in on 1/10/2016, it is 1,50,000 into 6 by 100 into 6 by 12, because the amount has remained in the business only for 6 months. Therefore, we arrive at rupees 4,500. In total, the interest on capital for Reshma is 9,000 plus 4,500, which is equal to rupees 13,500. I hope you understood the first two scenarios. Now let us get into the third scenario, when there is addition as well as withdrawal of capital during the accounting period. Whenever there is addition as well as withdrawal of capital during the accounting period, the interest on capital will be calculated as follows. On the opening balance of capital account, interest is calculated for the whole year as stated before. For the additional capital brought in during the year, interest is to be computed on that amount only for the period for which the money remained in the business during the accounting period. So for the opening balance and the additional capital, it is clear because we learned it in the previous two scenarios. Now, when there is withdrawal of capital amount, the interest on capital can be calculated in two ways. So there are two methods in calculating interest on capital when there is withdrawal of capital. So in the first method, we need to calculate interest on the opening balance from the beginning of the year till the date of withdrawal, and then on the reduced capital for the remaining period. In method 2, we need to calculate interest on the amount which remained in the business for the relevant period. This may seem a little bit difficult to understand, but by the help of an illustration, you can get better understanding on this concept. You can calculate interest under any of these two methods because both of them results in same answer. Now let us look into the illustration. Saloni and Srishti are partners in a firm. Their capital accounts as on April 1, 2016 showed a balance of rupees 2 lakh and rupees 3 lakh respectively. On 1st July 2016, Saloni introduced additional capital of rupees 50,000 and Srishti rupees 60,000. On October 1, Saloni withdrew rupees 30,000 and on January 1, 2017, Srishti withdrew rupees 15,000 from their capitals. Interest is allowed at 8% per annum. Calculate interest payable on capital to both the partners during the financial year 2016-17. So now let us look into the solution. First, let us calculate interest on capital for Saloni under both the methods. So under first method, we saw interest is to be calculated on the opening balance from the beginning of the year till the date of the withdrawal, and then on the reduced capital for the remaining period. Right? So as you saw, on 1st October, Saloni withdrew rupees 30,000. Therefore, till 30th September 2016, we need to calculate interest on the opening capital of rupees 2 lakh. Therefore, from 1st April 2016 to 30th September 2016, it is 2 lakh into 6 divided by 12 into 8 divided by 100. We are calculating for 6 months because it is from 1st April till 30th September. Therefore, you get the answer rupees 8,000. Then on 1st October, he is withdrawing rupees 30,000. So from 1st October till 31st March 2017, on the reduced capital, that is 2 lakh minus 30,000, which is 1,70,000, you need to calculate interest. So 1,70,000 into 6 divided by 12 into 8%, which amounts to rupees 6,800. On 1st July, he is introducing rupees 50,000. So for that additional capital, you should calculate interest for the period for which the amount remained in the business. So from 1st July 2016 to 31st March 2017, that is for the period of 9 months, you need to calculate interest. So 50,000 into 9 divided by 12 into 8 by 100, which is rupees 3,000. If you add all this, it amounts to rupees 17,800. This is the interest on capital for Saloni, which is calculated under method 1. So under method 2, we calculate the interest on the amount which remained in the business for the relevant period. So here you need to note that till 30th June 2016, there was no change in the capital because the opening capital was remaining unchanged. On 1st July, Saloni is introducing rupees 50,000. So from 1st July till 30th September, the capital remains 2,50,000. That is 2 lakh plus 50,000. Then on 1st October, Saloni is withdrawing rupees 30,000. Right. So 2,50,000 minus 30,000, which is 2,20,000. This remains unchanged till the end of the accounting period. So from 1st April 2016 to 30th June 2016, it is 2 lakh into 3 by 12 into 8%. Why 3 by 12? Because it is for the month of April, May and June. So 3 months. The answer is 4,000. For 1st July till 30th September, it is 2,50,000 into 3 by 12 into 8%, which is 5,000. For 1st October till 31st March 2017, it is 2,20,000 into 6 by 12 into 8%, which amounts to 8,800. So the total of all these three, it is rupees 17,800, which is interest on capital for Saloni calculated under method 2. So as we already saw, the answer under both these methods are same. Now let us calculate interest on capital for Srishti. So under method 1, Srishti withdrew rupees 15,000 on 1st January 2017. So the opening balance of capital account remains the same till 31st December 2016. So from 1st April 2016 to 31st December 2016, it is rupees 3 lakh. So on 3 lakh, you should calculate interest for 9 months. Therefore 3 lakh into 9 divided by 12 into 8%, which is 18,000. On 1st Jan 2017, she is withdrawing rupees 15,000. So 3 lakh minus 15,000, that is 2,85,000 remains for another 3 months. So from 1st Jan 2017 to 31st March 2017, 2,85,000 will be remaining in the business. So for 2,85,000 for 3 months, 8% is 5,700. Then for the additional capital introduced on 1st July 2016, you should calculate interest for 9 months. That is from 1st July 2016 to 31st March 2017. 60,000 into 9 months into 8%, which is rupees 3,600. So the total of all these three is 27,300. This is the interest on capital for Srishti calculated under method 1. Now under method 2, that is calculation of interest on the amount which remained in the business for the relevant period. We calculate as follows. As you know, till 1st July 2016, the capital remains unchanged because on 1st July 2016, Srishti is introducing rupees 60,000 into the business. So from 1st April 2016 to 30th June 2016, the capital is 3 lakh. Then on 1st January 2017, Srishti is withdrawing rupees 15,000. So till then, the capital, that is from 1st July 2016 till 31st December 2016, the capital will be 3,60,000. That is 3 lakh plus 60,000 additional capital. Then on 1st January 2017, she is withdrawing rupees 15,000. So from 1st January 2017 till 31st March 2017, the capital will be 3,45,000. That is 3,60,000 minus 15,000. So for the first 3 lakh, you should calculate interest for 3 months. That is from April till June. So the amount is 6,000. For 3,60,000, you need to calculate interest for 6 months. That is from July till December. So the answer is 14,400. For this 3,45,000, you need to calculate interest for 3 months. That is Jan, Feb and March. So the resulting amount is 6,900. If you sum all these three, you will get 27,300. This is interest on capital for Srishti calculated by method 2. I hope you have understood the concept of interest on capital very clearly. If you have any doubts regarding accounting, please do send it to this email ID queries2tutor@gmail.com. If you have not subscribed to my channel, please do subscribe and press the bell icon. Please do follow our Instagram page. I have given the link of the same in the description below as well as in the about section. Let's make accounting simple.